Hello, hello, hello. Welcome to another ES Futures trading stream. Today is Tuesday, June 13. It is 8:52 a.m. CPI was released just a moments ago, like 20 minutes ago, and the market has a mixed reaction here. Before the number, before the number, the market was the overnight inventory was 100% long. All the selling, all the buying coming from Cero. Now you can see Cero was bought one, two, three, four times. Market had little spike, but the most important thing to me here was the market has a gap to the upside. It has a gap to the upside before the CPI. Also, the market has a new high in the overnight. Remember? It is rare that the market has any kind of significant break or before with a high that is made in the overnight. I have decided not to trade this week because the reason is because historically these weeks where the contract when this contract expires and the new one uh, starts, I personally have had um, too much struggles. So I decided just not to do anything. Of course, the first thing you do after you say something like that is you find yourself trading, right? But the reason why I do that, why I'm doing that is I'm going to explain it right away. We have these two contracts. Now we have the ESM that expires next Tuesday, and we have a new one, the U3. All right. Um, you will see something here. Okay. Then notice how the current contract. I'm going to call the current the old one. The old one was testing the 4300, right? It was being sold, coming for the 300, being rejected, coming selling for the 4300, being rejected again, selling again for the 4300, and then boom, it breaks the 4300. Finally, breaks it. All right. Now, 4300 is support now. Was resistance, now support. Is not being tested, and yesterday was bought. I think yesterday, this low that was made yesterday is quite, it's quite dangerous here because we have multiple lows here, and these lows, this C period here gave us excess, but I don't think this was corrected here. There's a bunch of longs here, and the potential for something here on the lower side is is uh, is there. The whole overnight inventory was removed. It was, I guess, what is what? It was 100% long at the time. Was removed, and then up we go. We take we have number spike from yesterday. We have a spike to the upside. As long as the market keeps or trades above or builds value above this spike base, the trend to the upside remains. But it is getting weaker. Look, notice how where where all this buying came from. The base is hard back. It started at hard back. Then we have another weak low here. This period here was bought again from hard back, this time from the previous period. The previous period also was used to buy here, you know, you know, weak buying, weak buying, weak buying, weak buying here, and the closing as well, you know. And now the overnight after the number was released made a base right here. And this is a mechanical level we have here. It was interesting to see this, because first it took care of the longs here, all of the longs. The market was kind of some, but had the market was 100% long. The overnight inventory was 100% long. Was removed, all the longs were removed, and then market took care of the shorts. Now I'm going to use now the new contract. The new contract that this is squeezing the shorts here. I think that yesterday this part here was market just dealing with the shorts, squeezing the shorts to the upside. It was a short squeeze yesterday. Um, it's this doing the same here now with the overnight inventory here. With traders that thought that this market was going to break here. It's squeezing it. It's squeezing them. What would you like to short this market? We have a gap to the upside. That guidelines is go with the gap, right? It is this is still we still have like uh, but more almost sorry more minutes to go, one period to go. We have a gap to the upside. We have a huge gap to the upside. Now this is a new contract, right? And notice where 4300 is. The market is not dealing with the 4300. Market is actually dealing with the 4400 here, right? This is the new one, 4400. And what's happening here is, let me show you something else here. Wow, look at that. There's a lot of long inventory here. Now, this is yesterday. This is the settle. And notice the volume we have. This is the old contract that expires on next Tuesday. The volume, not the volume, but notice the volume of the new contract now. It was almost double. No, not double, but more than the old one. I will consider this June 12th, the first day that the new contract has volume. This is Friday. Notice how the numbers are inverted. And this is Thursday. Very low volume here. Very low volume, the new one. On Wednesday, even lower. The new contract remain with around the same volume, one and a half, one and a half, and the new one is picking up volume. There's a lot of rollovers that happened yesterday. All the contracts rolling over yesterday. That's one thing that is adding craziness. That's why I decide not to do. I have decided not to do anything because there's a lot. There's mixed. There's double references, double behavior. Because the new contract today or yesterday, this is the new contract basically starting to work, right? High volume, almost a million in the regular trading hours, and previous day I don't have it here, but this is very low volume, right? And notice how relevant this reference will be, the 4400. in the new one. Okay. Now the old one, we still have one more week to go. There's a lot of I suspect that there's a lot of um, options, a lot of longs on that market that could have that can have a serious impact in what the market can do or will do this week. Now, the other thing I want to show is, let me pull my bar charts here, the daily here. Notice how the market has having a breakout of this level here, but and it's having a gap here. But this gap actually, this is very misleading, right? That's not a gap. You we have seen that there's no gap here. Can you see this day is overlapping to this day? Value is overlapping. What's happening in the new contract as well? This is overlapping. There's no gap here, right? There's no gap. This is just a contract. It's just that it being this is a contract that is being adjusted, right? And the new contract, because this is a continuous chart here. This is a continuous chart, and this most retail, most traders have these kind of charts, and they will see a gap on the charts. But there's no gap there. Right? And the next reference in the upper side, what's the next reference in the upper side? This is another round number, the 4,500. Notice what the 4,500 is what we have at the 45. We have this matching highs here. And the next one, the 4,600, around this area as well. Those are the next reference in the upper side. And this, this is, man, the daily is a total, man, this is very dangerous to me. It is very dangerous. The market is going to the momentum is to the upside. Right? Let's take a look at the monthly. What's happening in the monthly? The monthly has, look at this trend. You know, it looks like an upside trend. It is a trend. I still consider this to be in range. And what is having here, the market is having a breakout in this big range that we have here. This 13-month range. Notice how there was a breakout here to the downside and did not have continuation. When the breakout fails, look below and fails, the destination is the opposite side of the range. Now, it took months. It took 1, 2, 3, 4, 5, 6, 7, 8 months for the market to travel to the opposite side of the range. And now the market is having a breakout to the upside in the monthly. And now, and if you inside this range, what can happen here? I'm going to remove this one now. I don't consider it, but I will leave this one here. There's a weak low here, matching lows here. The next reference on the upper side is this range high, 46.20, 46.30 here, up here. Upside continuation, we see the market taking this, and then we have everything is back to normal, right? Everything is roses, is a better roses here. So be careful what's happening here. That this trade has been completed. Now there's a new trade that can happen here. Now, it's either upside continuation or look below and fail, which targets this low, or side range, more likely range before the market picks a new directional movement. Now, the weekly, what do we have in the weekly? The weekly also shows a gap here. There's no gap here. Right? Remember that. There's no gap. This could be misleading. The next references on the upper side, round numbers, right? 45 and 46 to the upper side. The daily, we have seen the daily. This formation here to me looked like a short covering. This formation here, this is clearly a P, but this is having an upside extension. But notice how this is very thin, right? If this keeps going to the upside here, boy, I mean the best thing for the market here is sideways trading here. The market can build value to build support to the upside movement. Right? It's, and this is the 4500 next to us, and this is we talk about that as the 46. Notice how far this from the moving is how far it's getting from the moving averages here. Very far, very far. I won't be surprised if the market is bought from this reference from this moving average later down the road. Right? And the other markets, the bond market, crude oil, man, this is impressive how crude is making new lows here after the Saudis keeps announcing more oil cuts. The market just keeps, this keeps going lower. This is worrisome to me because it's a sign that the economy is not that good, right? Dollar is high. Seems like I don't know what's going to happen here. There's a range here. There's a multiple lows here. Now the more bond market. Oops, what happened here? Okay, oh, come on. The more bond market is trading in a range, is building value in this. Notice how this is a range in the upper side and how there is nothing here. Absolutely nothing here. And it's feeling um, this vacuum here. This void here is being filled. This is the 10 and this is the 30. It's feeling the void here. And it's adding some stair step range here. We have this range, we have another range here above. Um, Gold, gosh, this gold is quite dangerous as well. It seems like all these markets are trading in a range. Then there could be a break here in any direction here. It could be to the upside, could be to the downside. Notice how there are multiple lows here. This day remove these longs here, and again it's being bought from the same level. This market, the gold market, can come crashing all the way to the 1800. Right? But the market made one, two, three new highs. The gold market. Once gold, I mean, there's a lot of fight around the 2000 here. 2000 is kind of like it was used as a support and now it's a resistance here. Just a round number, magic number there. Now I'm going to close this and come back to the market profile. You know, Notice now the volume of the overnight here. This is the old contract, 159, 160, and the new one, 300, right? 300. This is a new contract here. And notice how high it is. It just started to trading here. Um, it has a gigantic gap to the upside. I use I use the new contract to make my observations, to take notes in the new contract. Um, but since I trade the options, the new contract have options just for next week. Starting next week, I don't have anything for this week. It's just I think it's just too expensive. Um, but let me check. Let me check that. This is options board. Let me check my another. I'm going to put ESU3. Oh, do I have any? No, I don't have. Yes, I do. Huh? This is new. Ah, but it's so freaking expensive here. 31. No, just too freaking expensive for it. This is 13, 16, 20. This would be next Tuesday. Yeah, it's just so freaking expensive. It's just too expensive. Um, and what I was pointing is I didn't like these lows here. This high volume, these are matching lows here with high volume to the lower side, in the lower side of these histograms here. Non-excess, non-excess here. I call it weak and poor. Why is weak? I can say it's poor. Oh, weak because it's the same as the previous day here. Same as the previous day. But this is the old contract. Let's check what happens. In the new contract, this is a non-access law, but what it has, it is still the same in the new contract, but this day, remember, this day has no volume here. This day have absolutely no volume here. Just just like 10,000 or 20,000 total. Let me see. Let's see what happens in this day. What's the volume in this day? Look at that, 70,000. There's nothing here. This period, this period, 9,000, but it's very low. And usually the closing has really high volume. And now, of course, today, the next day decreases, and these days are going to be very low. Wow, look at this, man. Look at this. Even though volume is decreasing, look at that, 150,000. Gosh, this is a gigantic short squeeze here. Gosh, my God. Oh, my bad, my bad. No, no, no. I thought I was looking at the old one. This is the new one. I forgot. I was checking the new one. No, no. I want to see how the volume 69 is not bad. This is getting lower here. Um, another thing that could be relevant here is the volume. Notice how volume is. Volume is very low. Volume is very low. Very low volume. Overall volume in the market. And what I think is happening here, and these references here in the upper side, these are from contracts that are way back when, three, how many? Four contracts. This is August. That is this is September. Yeah, four contracts before ago, and these are not valid references anymore. You know, I will see. I may have some here. I mean, these references are not good anymore. This is very old. What I'm going to do now. Oops, where are you? What I'm going to do now, for example, is I'm going to use to update my references. What I'm going to do is this template is from previous contract, is from M. And notice, for example, I was doing something here. Notice, for example, how 6.8 low. 6.8 low is not here. 6.8 low is way up here, right? So this is no good. But this one will be, I will erase this at the end of the week because this is a reference from the previous contract. This is a reference from this one, 6.8. Let's take a look where 6.8 is. It's down here, 42.64. But the new one, there's nothing. What is in the 42.64? There's nothing here. But I have this reference here. Still, we could, because it could be of relevance if anything happens. Market can make a stop here, for example. If the market closes the gap, it could stop here. Why? There's nothing here. Okay, okay, there's nothing there, but there is something here. Uh, this kind of like crossing, that's this crossover references make the things complicated to me. Just add more information uh, to a job that has a lot of information that we need to have in mind. Have to be carried on many times for for longer periods of time. Adding one more is just add more job. Um, this is another task to the jobs we do. Now, going to what is happening now. Going to what is happening now, what we have here is a gap. No, the market has a gap to the upside. If a gap is going to be filled, usually the selling happens right away after the opening. If this gap is going to be filled, the selling happens right away. Now, we have a spike to the upside. We have a gap and a spike to the upside from the overnight and from yesterday as well. So spike here, gap here. All signs that the market going to the upside. If there's a gap there, the best trade, one of the best trades out there is when the market tries to fill the gap and fails to fill the gap. And a fail, that's a long. when the market has filled the gap, and it doesn't, and boom, market just keeps going high. One thing that is forming now, we have two distributions, you know, and this is another thing, right? If there's something, the market will keep building value around up in the upper distribution. The market will not close these overnight distributions here. I think it looks like this is very long, you know. This market is very long, but who cares, right? The market is going high. Um, Notice how there's a lot of volume here in this area, which is 43. Let me use this. This is not our. This is it. This is the other. Between 43.60 in this area. Oh, what's the lower this volume? 57, which is the closest. There's a lot of volume here in this area, which is actually this single print here. Now, what to me this could be relevant. This could be of relevance because closing the distribution here actually targets. If the market closes this distribution, the next thing is closing the gap. Closing the gap, settle. A lot of buying coming from settle. These ones are gone now. Targets the opposite side, and the tremendous amount of weakness that there is here from yesterday. You know, a day with thin, very thin profile here. Multiple distributions, two, three distributions here to the upside. Mechanical buy. Very, very weak buy here. Very weak buy here. I would be, you know, um, the guidelines, the guidelines here is or go with the gap, right? Go with the gap that is not filled quickly. You know, if this gap is not filled quickly, meaning right after the opening or during the freeze period, that's alone. I am very hesitant. I see tremendous amount of weakness here. You know, this market can have, I think any piece of news can take this market very uh, long distances to the downside. I was actually I don't even I didn't even take a look to the long side. Um, I was checking some options here. The 4280, 4280. No, the 4310 here. Why I was checking the 4310? I was going to use that and the other one, the 4310, because what that was the base that all of this movement, has a base here in daily high back here, but which was daily high back at the time. This is just mechanical buying here, and very narrow and multiple distributions here, sign of emotional trading here. Now a gap, just keep adding emotions. Just confirm that this is very emotional. This trading is very emotional. Now, I'm not going to go. I'm not going. Why? The thing is, why would I short a market that has momentum to the upside? You know, that's 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 the doom of traders. You know, they can see tremendous amount of weakness in the lower side, uh, but the market's going to the upside. You can be right. You can be right in your readings. You can be right in your observations. But the momentum is to the upside. It is just telling me that there is tremendous amount of risk in being long here. I would never, I would never trade futures here. Trade futures. If I got, for example, this 43.10 uh, puts here before before the number, those were five between 4 and 5 points. Yeah, and the market was somewhere, what was here. Notice how much how much value have lost. 3 points, right? So all this movement, 50 to 7, just 20 points here. If I was short the market, I would be underwater for 20 points. That's a lot of money there. That's a lot of value there. And this movement to the downside, I would have been impossible to catch here because this was so really fast. It took a fraction of a second for the market to come down here, and then boom, come back all the way up to here. Now um, there's no reason right now at this moment in time, 9:28, to be short. Right? Could be. As I say, historically, these were the times that I had most struggles in these, contracts rollovers because you have to monitor. I had to monitor two contracts actually. What's happening in the new one, which is the one that shows the volume, and and then I have to keep an eye on the old one because that's the one where I have my my options. Now let's see the first sign closing the gap. Market has closed the overnight distributions there. That to me is could be a sign of something here. Yesterday I said, man, I didn't like the short here. I didn't like the short. So I talked to myself, okay, I'm going to wait for a rally here to short the market. But the market never give us, never give me an opportunity. The market just keep going higher and higher and higher and higher. Why would I short a market that is going to the upside? You know, why would you do that? No, I hate these things, man. I see when I have a mirror here. I guess because I have multiple charts up. I have like four charts here. All right, market market has a gap. Market shows no interest in closing the gap. Market open here. Boom. Let's see. As long as the market keeps building value above the base of the spike, above this reference here, which happens to be also hard back here. That's coming kind of weak there. Some kind of weakness there. Nothing will change if the market trades keeps building value above this level here. Market's trying to, let's see, the market closes the gap here. There's tremendous amount. The market is very long now. Okay, very long here. Inventory is super long now. I'm going to put a new contract up here because it's the one that has the volume. Oh, I look at the new one. What do we have here? The 4400. If there's anything here, you know, if there's any problems, anything that can happen to your loan, to your short, to whatever, um, it could happen here around the 4400. This is important reference for the new one. What do we have in the old one? There's nothing here. There's nothing here, right? So now, for this specific moment, for this particular moment in time, the new one is the one that has kind of more weight to me. Um, I didn't see I didn't see from the overnight. It's gone now. I didn't see big blocks in the trading in the spike from the overnight. Just read. I would say it's more very short time frame trading going on in this spike here. The spike we have in the overnight. No big volumes there. I have seen though high blocks at the closing, after the closing. Uh, Here, really high volume after the closing. This is the old one, not any new one. Um, why the reason why I follow this is I have noticed something, some behavior here. When there is high volume blocks between 4:30 or after the market close, high volumes hit in the overnight session already. I consider that the overnight. There is a tendency, right? There are good odds the market is somebody's absorbing that selling that. So there's a good tendency, good odds the market keeps the movement that's happening at that moment in time. In this case, was to the upside, you know. So good odds to the upside. Um, since I was watching yesterday, remember when I say, okay, I'm going to look for, I didn't like this, so it could be something to the downside, but never, the market never give us a chance. There was not a single moment in time that the market gave us an opportunity here to go short yesterday. And the closing, the high volume that I saw afterwards here. This is the closing, this is the last period, and this is the overnight. This is 4 to 4:30, this is 5:30 to 5. Really high volume here. Blocks, right? Trades, I mean, not once, but 2,000, 8,000, right? That's a lot, right? 8,000 contracts being bought, in hundreds or 150s or above 50s. That was another sign. Do not short the market. This is extreme. The market is super weak. The structure of the market is crazy weak, but it's not the reason to go short. It's not. Now check this out. Check the volume the new contract has. You still have one week to go, right? Okay, 74,000, and the new one 15. Yeah, there's still tremendous amount. There could be tremendous amount of naked um, especially now. I would pay special attention to Friday. There's a supercharged week today. We have FOMC tomorrow. We have Fed chairman press conference tomorrow. We have PPI. We have consumer sentiment. There's a lot of things this week. They're going on this week. This to me looks like a gigantic short squeeze here that's going on in the daily time frame. I consider, for example, the low, the current low. Notice where this low is. Oh, this is not 4400. 4400 is up here. Huh, what happened here? Don't tell me, man. Don't tell me you made a low for you. Oh my God. Look at this. Look at this low. God damn. You want to be long from this? Oh, crazy. This is crazy, man. I mean, I am not this kind of trader, but that I would never go have the guts to go long exactly from 4400. This is craziness, pure craziness here. huh? This is a new content, remember? The old one has nothing here. The old one is what the old one is 43.55. This is this is short squeeze here. Market squeeze is short. But this the market can I think uh, this low has good odds to being taken today. This is absolutely super weak low here. This pure craziness here. Now the high is not good as well. Not just that high, right? Not just that high. Where the market is being sold from? Overnight high. Now this one has cleared the overnight high. This actually is good now. So which one you follow, right? The new contract is building value now. It's accumulating volume. There's new loans coming to the market, and they are buying the new contract. Okay, they are buying the new contract. The old contract already has a tremendous amount of long inventory, tremendous amount of long, weak inventory here. All of this is mechanical buying, poor laws, weak laws, crazy here. And the risk the market having a break is high here. But who cares? Who cares? AI is here to dominate the world, to save the day. Yeah. This is just be what's happening is I think what could be happening is one thing is shorts. There was tremendous amount of negativity in the market. Negative is pure in the market. The market is going to crash. The recession is here. Recession is starting. There's no recession. Whatever. Um, there was a tremendous amount of shorts. I mean, why would you short a market that's rallying, right? You never short a, a, a market that has momentum to the upside. And you just wait, but traders just keep doing that. You can see traders keep doing that. And when by the time the market breaks, you know, you are already broke. I don't like this at all. This is super weak here. We have FOMC tomorrow. This is another weak level here. Oh my God, look at that, man. Gosh. This was an attempt to fill the gap here. This was an attempt to fill the gap. But it's a good level also. A good reference. I am not this kind of trader. If you are this kind of trader, you use this reference to go short, to go long. This could have been a really good move. You have all the reasons, right? Spike, spike in yesterday, spike to the upside yesterday, spike to the upside in the overnight. You have a gap to the upside and your reference. Okay. You want location? This is your location here. This is momentum here. Now we have a high. The market has a high. Volume has dry, higher volume here. And once the market sets the tone, and this is what it takes to trade, right? You got this market is super weak in the lower side, but the market is going to the upside. You trade with the market. Okay, I don't like this low. We now have excess in the upper side. Market has excess. I think all these shorts are, the shorts from the overnight if they didn't get out here now, they are out. They saw the market. Oh, okay, this is it. Did you see the upside movement? How fast it went to the upside? That's a good tempo. That was good tempo going to the upside. This could be the short final, throwing the towel there. Naked cold sellers. Oh, okay, this market's gone higher forever. Overnight high has been taken care of. The 4400 remains there. Very. By the way, how much is the VIX? Nasdaq new 52 highs. In the meantime, the VIX is 14.50. Yeah, I haven't seen the VIX that low in a long time. This 44.44 has good also been taken out. But the market could come just, I mean, repairing this, they put the market at half back here. There's a good rejection here. This is what, when 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 looking for excess in the upper side, what you want to see, what I want to see is, higher prices being rejected, right? The market showing rejection to higher prices. I mean, it goes high and quickly just drops. Notice how quickly it came down here. It was way up here just 5 minutes ago. Now it's way down here. That's a rejection. Could be faster though. Could be faster. Now, still the market has, still the market to the upside. Now, selling coming from Halbach, come on. That's Halbach right there. Value is higher. Okay? It's obviously it's high because we have a gap. I want to see the market can close the gap. Okay, it looks like it's going to make an attempt to close the gap. The market fails to close the gap. Couple days ago, couple of trading days ago, I saw an attempt to close the gap that failed. That was a low notice how value. Volume is being built here. Look at 10,000 here. Very clear though. No accumulation here. Just no congestion here. Value being built here. That's another story. What I mean with that is I don't see reds here. This is strong. It could be a strong buying here. Boom, boom, boom. The market doesn't struggle here. It doesn't build reds here. This is the new contract. Something like this, for example, right? A lot of reds here. But this is worthless now. Notice that this is only 2,000 here. This is the old one. I'm paying more attention to the new one. If I've seen this with congestion, that tells another story. The market just came back here do some back and forth, and let's keep going higher. Another thing here is this rally, the higher the market goes, the higher the odds also that it's going to keep going higher. This is the second time the market is being bought. It's been sold from Halbach. Let's see if value, if volume, if it starts gaining volume here. It built volume here, and now it's going to the upside. Let's see if we got volume here. Now, can you see the mixed signals here, right? A strong market uh, doesn't make this kind of lows here. We starting buying from this level. This is not sign. This is sign of very short time frame buying here. No, but the market has a gap to the upside. It didn't make an attempt to close the gap here. It did, right? It did. Opened here, some trading to the upside, and was bought. Then was bought to the low side. Why I say that the market has higher lows to keep going higher if the higher it goes, because there's a lot of money. There's a lot of money that is in the sideline. Sideline. There's a lot of um, hedge funds, market managers that are underinvested here. That's another kind of job that they have. If that's hard to understand, right? The way they are not measured the same way as we do. If they're under investment invested, they're not going to lose money. They're going to win, right? But their winnings are going to be less than other hedge funds that have are more invested, right? And the way how they are measured is they're measured against other ones. You can be up, let's see, 3% or 10% or whatever. But the media, the average, if you are up 3%, the average could be 7. So you are low, right? And they will feel the pressure and to start investing, which in turn can trigger or can, can move the market higher. That's also a possibility. Right? How many times this market has been sold from hard back here? There's value building being built here in this area. overnight high has been taken. We have now, the market has a high that was made in the regular trading hours. That's a good high. It's a very good thing for the market. Not to the upside movement, but I'm looking to the downside here. Now currently on this level, the 41, the 44.06 here in the new one, 43.60 in the old one. There's there's a lot of volume here in this area here, right? If the market goes higher and comes back through that, or it can trigger a sell-off here, or it can trigger if it goes higher, there's a lot of shorts here that can again be squeezed to the upside. So why the thing is why you would like to short this market here? You got that reference, the 4400, which is a really bad low there. Now this is one tick chart. Having that amount of volume in one tick chart, that's a good thing. Again, it's back to that level. This market has good odds taking the 4400. Now taking the 4400, okay, if the market takes the 4400, could start one time frame lower here. Using as a support, this just add more weakness here. This tremendous amount of weakness. This is crazy here. Very crazy. I will pay a special attention to this area here. That area. I will do, yeah. I wish this had more, but let's do this. Let's do that area. That area. What happened in the market around this year? Remember, multiple times the market was sold from hard back, but it's now hard back, which is a hard back. Questions, answers. You have any questions? You have any answers? Any comments? Your comments are very welcome. All right, it is 10:05. 10:05. If there's no questions out there, I guess I'm going to call it a day. And wish you guys a wonderful trading, a wonderful rest of the day. Stay safe and very have good luck. See you.